Um, I am Yolandi Plakis. I'll be joined by my colleague, Bulupilo Papai. And we will then present today's session to you all. So thank you very much for joining us. Thank you for taking up the time and joining us. Today's session is on registration predominantly. So how to register as an accountable institution with the Financial Intelligence Center. Then also we'll take you through some of the obligations that is the risk management and compliance program specifically, and key elements of obligations that accountable institutions have to comply with. So again, a warm welcome from the Financial Intelligence Center. I hope you all can hear, and our audio and video is coming quite clearly through to the audience out there. If you do have any challenges, please do let us know through the chat box and we'll try to address it. So just in terms of a bit of housekeeping rules for today's session, as I've mentioned, I'm joined by our co-host, Fulufelo, who will go through some of the registration parts of today's webinar. We will have a question and answer session at the end of the presentation. So if you have any questions, please do send it through. We will have that dedicated time to go through your questions and actually answer them. Then my producer is going to publish a link in the chat box. That link is the registration form. Please do click on the link, complete your details, submit it through to the FIC. We are going to send everybody who's completed the registration form a copy of the presentation. So that's quite important. At the end of today's session, we will also have a survey. So as you go along, make notes, try to gain as much as you can from the session. At the end of the session, you will be able to give feedback on how you think the session went. So that then brings us to the close of the introduction. As I've mentioned, today's webinar is focused on registration and then also taking you through some compliance obligations. So then, without further ado, I'll then go through to the presentation. So as new accountable institutions, you will be faced with a list of different acronyms, and it all becomes a bit confusing if you don't know what exactly which acronym stands for. So just in terms of acronyms, you'll see the anti-money laundering stands for AML, at least stands for anti-money laundering. FATF, it's a word you're going to hear quite often. It stands for Financial Action Task Force. FIC, obviously Financial Intelligence Center. PCC, Public Compliance Communication, which is a form of guidance which the FIC issues. And then also PF, it's Proliferation Financing, ML, Money Laundering, CF, Terrorist Financing, and POCTATARA, which stands for the Protection of Constitutional Democracy Against Terrorist and Related Activity. So those are key acronyms you need to know throughout the session today. We are going to refer to those acronyms. As a new accountable institution, there are certain guidance documents that are going to be very helpful to you. Guidance Note 7, that is a very comprehensive guidance note which provides you with information on how to conduct CDD, how to conduct enhanced due diligence, and so forth. Public Compliance Communication 53. As an accountable institution, you must have in place at least a risk management and compliance program. PCC 53 sets out a very succinct template which you can rely on. You need to, obviously you would have to customize the template. You cannot just copy and paste that RNCP, but definitely provides you with valuable guidance on how to draft an RNCP. Draft PCC 5D, it provides guidance on how to register with the FIC. And if you want to have some sort of delegation structure and so forth, Draft PCC 5D will provide you with guidance on that. Draft Guidance Note 104A, that draft guidance provides guidance on IFTR. It's not really important to an accountant as an accountable institution. It's a reporting type that you should be aware of, but it doesn't really apply to you. We'll go through it in detail in the next few slides. And then guidance note 5C, which deals with cash threshold reporting. There you definitely need to be aware of that and go onto the FIC website, download these guidance products. It's very informative and it will definitely help you in complying with your obligations. So to get through to the crux of today's session, and today's session is all about trust and company service providers. That is item 2, service providers. Item 2, service providers in terms of Schedule 1 to the FIC Act. And at this point, I'll just check with my producer, is everything okay? Okay, so audio and visuals should be fine on your side. So, as I've mentioned, Schedule 1, at least item 2, includes trust and company service providers, and the update to Schedule 1 to the FIC Act actually came about on the 19th of December 2022. The schedule was widened, so now it means that there's more types of entities that need to register as a TCSP, and included in that category of TCSP, we do include accountants. So I'll just read quickly through actual definitions so that you get the whole understanding of the definition. A TCSP, person who carries on the business of preparing for or carrying out transactions for a client, where the client is assisted in the planning or execution of the organization of contributions necessary for the creation, operation, and management of a company, or of an external company, or of a foreign company as defined in the Companies Act. The creation, operation, management of a company, or an external company, or a foreign company as defined in the Companies Act. The operation, management, or management of a closed corporation as defined in the Closed Corporations Act. And then it also includes a person who carries on the business of acting for the client as a nominee as defined in the Companies Act, or arranging for another person to act for a client as such an for the client as such a nominee, at least. A TCSP also includes a person who carries on the business of creating a trust arrangement for the client. A TCSP also includes a person who carries on the business of preparing for or carrying out transactions, including as a trustee, related to the investment safekeeping, control, or administering of trust property within the meaning of Trust Property Control Act. So as you can see, the item 2 is quite a lengthy item. It includes various types of services and activities. It does not cover one specific profession, meaning these type of services could be provided by a range of different professions, including auditors, including accountants, including companies that are established specifically to assist other persons with the creation of legal entities and so forth. So it is quite a complicated item, and I think we'll break it down now into the different elements of this item 2. So you see there, it starts off with a person, the definition, a person who carries on the business of preparing for, so forth. There, please note that a person in this context can include both a natural and a legal person, where that term carry on the business of is set out. It needs to be interpreted in its ordinary, within its ordinary meaning. So there, obviously, business would refer to some sort of commercial activity. It wouldn't refer to something that you do as a charity or something that does not form part of your regular features of a business. So it needs to form part of your commercial activities. So if you provide it on an occasional basis and it's not part of commercial activity, then it wouldn't be classified as, you wouldn't be deemed a TCSP. If you look at what is a regular feature for business activities, look at whether or not you advertise, provide this type of services, or you conduct this type of services on a regular basis for your clients. And also whether or not you have set procedures in place to provide the services as listed on the screen right now. If you have any of these elements and provide it as a commercial activity on a regular basis, then definitely you do fall within the category of a trust and company service provider. So then there's other terms, as you can see on the screen again, highlighted in bold, like the organization of contributions. And there, basically, that refers to assisting the client to raise capital funding for the client's business. That could be either through sourcing of funding or liaising with donors or investors. So that would refer to organization of contributions. Terms such the following term there in subcategory BB, the creation, operation, or management of a company. Their creation could refer to services where you actually assist a client to register, or you assist the client with the administrative process to register a legal entity or company, trust, a partnership, or so forth. So you assist that client to register that entity with the relevant organization, be it the Companies and Intellectual Property Commission, be it the master, so forth. And it also could include that creation, operation, and management could also include actually advising on the legal requirements associated with creating this entity. So that's specifically on creation. Then operation, when you assist with the daily operations of the client's business, that's on a day-to-day basis, whatever the client may need assistance from you in that regard. There, you also deemed a trust and company service provider. Then on the management, management could entail, for example, acting as part of the executive management or making decisions regarding the particular client or legal person. So there, again, daily operation activities could include assisting in the planning phases, the execution phases. It's a very broad category. This item 2 is very broad in that it could include a lot of services and activities. Not the centers, it's not the same, the FIC won't provide a set list of exactly what falls within this item. It is up to the entities and associations and so forth to really consider what all falls within this category and register as a TCSB. We're not going to provide a closed list of all the activities. There is a long list of activities that can definitely fall within this category. So therefore, it becomes a bit, it could be counter to provide a set list, closed list at least. So there, again, there are certain organizations that are, or arrangements that are excluded. So if you were to provide services relating to trusts created by a testamentary disposition, that is, we act as some sort of executor of a late estate and so forth. Trusts created by a court order, trusts created for persons under curatorship, and then also trusts created by trustees of a retirement fund in respect of benefits payable to the beneficiaries of that retirement fund. That type of activities are not covered in item 2. So they that would not be, you wouldn't have to register as a TCSB under this item if you provided that type of activity. So we have published a draft guidance product, and that's referred to, that's draft PCC 6A. It was published for consultation in December 2022. If you look on the FIC website, you will find that actual draft. And it does aim to provide further clarity to trust and company service providers on what exactly categories fall within the definition of trust and company service provider. So that's item 2. What the FIC has done, we obviously have received various comments back from different organizations, including industry associations and certain accountable institutions. They have taken that into account, and the draft is being updated. A final version of the draft will be published in the near future. The FIC has, after that, also engaged with specific stakeholders, including industry bodies, on this actual draft and on the activities that will be included specifically for accountants, and so under the definition of TCSB. So I guess in the final version of PCC 6A, you will get a bit more guidance on what services fall within TCSB. And if you're looking at some examples, which we can maybe list, and again, I need to stress this point, it's not a set list. There's way more activities that fall within this definition, but services that may be include auditing, managing and advising our clients' funds and assets, accounting, budgeting and bookkeeping functions, preparing of annual financial statements and accounts, advising on tax obligations and compliance requirements around tax obligations, providing tax advice, and also assisting with the completion of tax returns. Also, we provide advice on business, on the structuring of transactions and mergers and acquisitions, and setting up of some structures for succession purposes. So we do aim to provide further guidance in terms of examples of activities that fall within the TCSB definition. We definitely won't provide a set list. It is up to you as an entity to determine whether or not you fall within item 2 of Schedule 1 to the FIC Act. So I have a look at the full Schedule 1 to the FIC Act. Check whether or not you have fall within item 2, as well as all the other items to the Schedule 1. It might be that you don't fall within Schedule 2 specifically, but you could very well fall within another item as listed on Schedule 1. So I think at this point, I'm then going to hand over to my colleague, and my colleague will then take us through parts of registration, at least the points on registration. So over to you, Pulu.
Everyone, like my colleague said, my name is Fulvero Pai, and I'm the System Compliance Analyst, FIC. So today my presentation is going to touch on registration. First thing first, when you are doing a registration, you can do it through our website. You go to our website and then you click on the registration. then the key thing to note is that you can read there are two types of registration. There is an entity registration and as well as an individual or a user registration. So if you are registering an entity, then you will select registration as an organization. Then you populate the details of the organization together with the user detail. And then with an individual, if you're registering as an individual, it's very important and key to note that you need to indicate the org ID for that organization that you are registering as part of, meaning that there should be an organization registration already provided or been done before you do an individual registration, so that you can provide the org ID for that particular organization that you are registering under which. And then the other thing to note is that if you are if you're doing a registration for a user, there are documents that are required for registration. One is the certified ID copy for the person or a user that is registering, and the letter, authorization letter from the entity you are registering under, which clearly indicate or have the details of the entity. And then the content must also include the name of the person that is registering, the ID number of that particular person, and the role that they will be playing or registering as for that particular entity. For an example, if you're registering as a compliance officer, then the letter should clearly indicate that this particular person of this ID number is registering under our entity as a compliance officer. And then once the registration has been received or processed by the FIC, two things will unfold. One, the registration can be rejected, and there will be a comment with the reason why the registration has been rejected, for you to then rectify and register again. And then on the same hand, if the registration is successfully processed, if it's an entity registration, then you will receive an acknowledgement that with an org ID number provided for that particular entity registration for that entity. And that note will be provided through the email address that will be provided when you are registering. So it is very important or key to know that when you are registering, the email address, we often receive questions around this. With the email address, it's a unique requirement for registration, which means that you cannot reuse the email address when you are registering. So if you are registering under this particular entity, so your email address should be unique, so you cannot reuse the email address. So you must make sure that if you are registering again on GoML, should that happen, you are registering under different org ID or entity, then you should make sure that your email address is not the same, or you're not using the email that you've already used when you are registering on GoML. And other thing is that once you have successfully registered on GoML, the compliance officer or any user or admin user on the GoML, you have the responsibility to update the entity details. So you need to make sure that the entity details are always up to date. And how you do that is that after you have logged on GoML, you can click on the top bar menu, you can click on My GoML, then the system will expand the submenu, then you click on My org detail. Then the system will then pre-populate the existing or the predefined details for that entity, and then you can then adjust or change the details under that particular entity. The FIC, there are directives that have been issued with regard to updating entity as well as the user detail. So starting off with the entity, updating entity details, we have Directive 1 and 4 that clearly instruct entities that are successfully registered with the FIC on GoML that they need to make sure that their information is always up to date. Should there be any changes on the contact, address, that information must be also updated on the government system. And then how you do that is that you log on into the government system. Once you've successfully logged on the top bar menu, you click on My GoML, and then the system will expand the submenu. Then you click on My GoML details. Then you will then be able to update those details. Moving on to updating user details, this is Directive 2, which instructs that each and every user that is registered on GoML, it's their responsibility to make sure that detail is up to date. Should there be any changes on contact, email, or telephone, and then they also have to make sure that they update their details on GoML. It goes further and also include that each and every person who accesses the GoML system, they must use their own credential, meaning that there's no sharing of login details of on the GoML. Meaning that we must not say, okay, because the compliance officer is not in today, maybe we can just use the particular details and share amongst ourselves. No, every person who accesses the government system, they must use their own detail as it is instructed by the Directive 2. Moving on to the GoML reporting. What you need to understand and know is that the FIC uses only one system for reporting, which is the GoML system. So should there come a point where now you want to submit reports on, to the FIC, so all reports that are submitted to the FIC, they are submitted through the GoML system. So there's no emailing Furupero or Yolande to say, I have this particular transaction that is reportable. No, you need to log on to the GoML and submit the report on GoML system. And the other thing is that we do have different types of report. We have the CTR, we have the STR, we have the IFTR report. So those reports, depending on the your scenario or your case, you need to make sure and understand what type of report you are to report, because each and every report it has its own type of mandatory fields that you need to provide when you're reporting. So you need to make sure that you're selecting the correct report type when you are to submit the report. And then the other thing to know is that the GoML system uses what we call the dual reporting when you are reporting, meaning that for each and every transaction that you are reporting to the FIC, there are two parties that are involved, meaning that there is a payer of funds on the transaction and the receiver of funds. So it can be either way, the client is paying for the services or product that you've offered to them, and you as an entity can receive, or either way can be that you as an entity, you are paying a client, can be on a refund or any some sort of a payback on after some services that has been offered there to the client. And then the other thing is that our GoML system supports what we call batch reporting. In batch reporting, this is where now entities are allowed to then have an integration with our GoML system, where you can now report in a bulk. This is mainly used by the entities that have a large report in a daily or large volumes of transaction, like the banks and the gaming entities. So if you are willing and you want to do that, you can also do that batch reporting, which is done through the B2B or integration. And then the other thing is that message board must be closely monitored. The message board is where now the GoML system sends you a message after you have submitted a report. That's where you're gonna receive the message on. If your report has been successfully processed, then you're gonna receive a message on the, you receive the message on the message board to say the report of this number that you have submitted, it has been successfully processed. It also applies if your report has been rejected. Then that's where you're going to see the message, your report that you've submitted, it has been rejected because of 1, 2, 3. So That's where you're gonna see the reasons why your report has been rejected. And then the other thing is that when you are reporting, it's very important and key to know and understand and keep in mind the reporting timelines. Each and every report, it has its own reporting timelines, which we're going to talk on the coming slide. We're going to emphasize that on the coming slide. And the other things that report that are not submitted or are in the draft, these reports are clearly, they are not submitted to the FIC. So you need to make sure that after you have submitted or drafted your reports, make sure that you submit those reports. And the other thing is that rejected reports must be remediated, meaning that, like I said, there is a message board where you can see if the report has been rejected with the reasons why, so that you can remediate those particular reports. Key thing there is that any report that is rejected and not remediated, it's as good as not being submitted to the FIC. Finally, under reporting is that reports must be detailed, accurate, and thorough. What we are saying that is, like I said, each report type it has its own mandatory fields and requirement. So each and every field which is marked with an asterisk, it means that that field is mandatory. So your report must you must provide those or capture those fields, and those that are optional, you need to provide the information if you do have that information. So it's better to provide as much detail rather than to provide less information. Moving on to the reports that you're obligated to submit to the FIC. Firstly, we have the suspicious and unusual transaction report, which is found under section 29. We also have the cash threshold report. In short, we call them the CTR, which is found under section 28 of the FICA Act. And then finally, we do the tourist property report. In short, we call them the TPR, and that is under section 28A. Now, as you can see on the right screen, there's a band which expands each report. So I'm then going to go through those sub-reports and share some examples or scenarios that can trigger you to submit those reports. Starting off with section 29, we do have suspicious and unusual transaction report, which is STR in short as well. So now this report, you will file this report when you have concluded a transaction with a client and there's something that is questionable about that particular transaction or the client. Either you have noticed this through when you are doing your customer due diligence or during at the point of that concluding that particular transaction. Let's say, for an example, a client discloses to you that the only source of income is their salary, which is, for an example, is 10,000. However, for them to conclude the transaction at the end, they make a payment which is way above their salary or the source of income. So that transaction is suspicious. So you need to file the suspicious and unusual transaction report. Key thing to note, you have concluded a transaction with the client, but however, there's something questionable or suspicious with the client. Secondly, suspicious or unusual activity report. In short, we call them the SAR. Now, this is a behavioral-based report. You file this report when a client approaches you interested and happy to approach you with regard to your services or products. However, when you are starting to conduct your customer due diligence, that client, they don't want to provide the identification or information to a point where they say, no, use my friend or my wife's detail. Then with that, to a point where they walk out of your premises. The key thing to know there, the client is interested in your services or product. However, they cancel the transaction base because they didn't want to provide the identification. So you will have to file the SAR report, suspicious or unusual activity report. And then we also have the tourist financing activity report. We call it the TFAR in short. And then also this one is a behavioral-based report, which you will file with the FIC when you were engaging with the client. However, you can see that the behavior of this client or their activity might be linked with some tourist financing. So you will have to file the TFAR report. And then finally, under section 29, we do have the tourist financing transaction report. In short, we call it the TFTR. Now, this one, you will have to file it when you have facilitated or concluded a transaction with the client, and you can see either the client is buying or first making payment to a due restriction which is known that is for tourism, or the client. So that particular transaction, you can then file a tourist financing transaction report. In short, the TFTR. Moving on to section 28, we have the cash threshold report. In short, as well, we call it the CTR. Now, this is a cash-based transaction or report where you have concluded a transaction with the client, and that transaction is done or paid in cash, hard cash note. It can be either on the premises, the client walks in your premises with the hard cash, with a bag full of cash, or they go to the bank and make a deposit to your account. Now, those two payments, they involve cash. So you are obligated to submit the CTR report, provided that the threshold, the cash payment is above the threshold of 50,000 or 49,999. So the key thing there is to notice that the payment is done in cash. It can be either deposit through the bank or walk in to the premises with the hard cash note. Okay. And also the threshold is 50,000. If the payment is above that, the 50,000, then we are obligated to submit the CTR report. Finally, we do have section 28A, which is the tourist property report. In short, we call them the TPR. Now, this report, you are obligated to file this report if you are you can identify this report at 2 points. At the one is when you are onboarding the client, when you're doing your customer due diligence, and you find that when you are scanning the client on the TFS list or the UN 1267 list, you find that that particular client is appearing on the list. Then that particular client, then you have to stop that particular transaction and then file the TPR report with the FIC. On other cases, when you already onboarded the client, you already have the relationship with the client, but you are doing an ongoing customer due diligence. If, let's say, for an example, you onboarded the client or you started the relationship, you established the relationship with the client 6 months ago, the client was not appearing on the TFS list or the UN 1267. But however, when you're doing your ongoing customer due diligence, after 6 months, you find that that client is now appearing on one of those lists, then you need to terminate the relationship and then file the TPR report with the FIC. Now, this report, they have the timeline that they're prescribed for each. For section 29, you have 15 days to submit the report. And then for section 28, you have 3 days to submit the report. And then for section 28A, you have 5 days to submit the report after becoming aware. Now, the FIC encourages the entities to submit report as soon as possible. Yes, we do understand and know that we have given you 15 days for under section 29. But however, if you have the information that you've gathered through your customer due diligence at the point of establishing the relationship with the client, what is there to wait for 15 days while you have all the information that you can provide when you are filing the report? So the FIC encourages the entities that as soon as possible, once you become aware or the transaction is concluded, you can then file the report. You do not have to wait for the time prescribed for each report. Moving on, the FIC uses the GoML system as the only registration and reporting platform. The system then enables you, like I already said, the registration. You're able to register as an entity or as an individual, a user under a registered entity. And then you can also submit reports. When you submit reports, you are then able to submit your STR, your CTR, as well as the TPR report. And then you can, it is also used for collecting data. The information that you submit when you're reporting, that information is then collected and then is used for analysis and also for case management as well as The other thing is that our system it has a secure communication. One thing to note worth noting is that when you are reporting as an entity, the person or the client that you're reporting, they do not have to know that you're reporting them. The same applies with the FIC. The FIC will not at any point then disclose that this particular entity A reported Mr. Pai for this particular transaction when they were buying this particular product or when they were offered these particular services by this entity A. So that you need to, I think is something that you need to understand. So you need not have to disclose to a client, and the FIC as well won't be at any point disclose that you have reported a particular client or individual. The other thing is that FIC also uses the platform for its daily operation function and requirements. So that is very important to know that. That brings me to the end of my presentation. I think the key thing that I can leave you with is that one, the person that you are reporting, they do not have to know that you are reporting them. And the FIC won't also disclose that you have reported this particular person. And when you are registering, it is very important to remember or to know that you need to have a copy of ID if you are registering as a user. You also need to have a letter of authorization that can then indicate that you are the person, your ID, your names, and the role that you'll be playing for that particular entity. So, and also that when you are registering, because there are points where when you are registering as an entity, you can then also register your sub or your sub entities. If you have multiple stores or entities or offices, you can register each individually, depending on the activity that you are doing. Then that person can be responsible for all what activity in terms of the FIC obligation. It can be one person responsible for all the entities. But however, the key thing is that when that person registered under each entity, they need to remember that the email address is a unique or it needs to be unique when you are registering. So when the email that you've used should not be the same as the one that you've used before, or that is already existing on the government as a part of your user detail. So that's it from my side, and thank you very much.
Thank you so much for that, Fulufilo. So definitely you've got an understanding now from the first part of the presentation on what a trust and company service provider entails. And it's a very broad category, item 2 of Schedule 1. And what we do advise is that you do register. And note that the obligation to register came into force in December. So 3 months from then, all accountable institutions should have been registered. All new accountable institutions should have been registered. So please, definitely without delay, go onto the FIC website where you find it says click here to report and register. Click on it and complete the registration. Yeah, there's been quite a few questions that came through on registration. For example, there is under TCSP, there are 2 subcategories on GOML. So where your entity provides both services of a trust service provider and a company service provider, the entity must register under both subcategories as such. There are questions about email addresses and the use of email addresses for registration. Each user needs a unique email address. So you can't register for more than one organization with the same email address. publish certain answers in the chat box. You can have a look at that, where you can actually add different numbers or so to your address to make it unique, and then use that exact same address with an added number or so to actually make it unique for their purposes. So again, just send through your questions to us. We are going to try to address all of the questions at the end. Remember that our chat box is open, so I do ask you to send through be mindful of the questions and the comments that you do make in the chat box. We are here to assist you, obviously. We do understand that it can be somewhat frustrating for some of you that are new to the process, but we definitely are here to assist you and to provide you with the guidance that is needed. And again, just looking at why it's necessary for accountable institutions to, or at least trust and company service providers, including accountants, to register, is because you do offer quite a unique service that is vulnerable to abuse. And criminals are aware of that. And you find in a lot of instances, criminals are aware that they can use legal persons as vehicles to evade detection. So a criminal will use a legal, a trust or a company, hide behind that trust company as a beneficial owner in order to evade detection from law enforcement and so forth. So the type of services that you offer is really crucial. It's crucial for you to send through Section 29, suspicious and unusual transaction reports, so that it enables our law enforcement to better combat money laundering, terrorist financing, and proliferation financing. So please, where you do feel frustrated at the new requirements and so forth, there's definitely different avenues. You can call our call center. You can send through a compliance query on the FIC website. We are here to assist you. Have a look at the guidance products that we offer. It really does help you. And you might find that as an entity, you've got a lot of the controls that you have in place, you can expand upon and to reach your goal of complying with the FIC Act obligations. Okay, so enough of that. So the first part was to take you through the definition of TCSP. The second part, just to provide you with a bit more insight on registration and a critical function of reporting. And now the next part that I'm going to go through is actually to take you through key obligations that you need to be aware of and comply with as an accountable institution. So South Africa is a member of the Financial Action Task Force, and the Financial Action Task Force is an intergovernmental body that actually sets anti-money laundering and combating terrorist financing standards. And they've got a lot of countries that are members. I've mentioned South Africa is a member. South Africa is actually the only African country that is a member at this stage. So it's very important for us as a country to adhere to the FATF recommendations and the standards. Of their standards, it does include the requirement to have an accountant as an accountable institution. So just for your information purposes, if you look at FATF recommendation 22, it sets out what all entities needs to be included as accountable institutions, or the FATF standards refers to them as designated non-financial businesses and professions. That's DNFBPs. And definitely in that list on recommendation 22, you'll see accountants are included. So definitely it's very important for the sector to be aware of and understand their role, and understand that you play such an important role and in combating criminal activity. So of the recommendations, it states that FATF came in and done what's referred to as a mutual evaluation. It's a sort of inspection on South Africa to check if we've got in place laws and different structures to actually adhere to what's set out in the FATF recommendations. That was the mutual evaluation. A mutual evaluation report was published in 2019. And you can actually 2021, sorry. You can access it on the FATF website. It's very informative and it gives you an idea of what all we as a country need to work on, what are our weaknesses and our vulnerabilities as a country, and what we need to put in place to better comply with FATF recommendations. Of the priority actions, it states that South Africa should ensure that accountable institutions adequately implement a risk-based approach through better assessing and understanding the inherent risks and refining and implementing the RMCPs to mitigate the risks. The authorities should provide better guidance on these matters and major MLTF risks such as corruption. If you look through the mutual evaluation report, you'll see a whole lot is stated on state capture and so forth, and the role that different sectors plays, and how different the abuse of different sectors enables state capture. So it does become apparent that of these institutions, the accountable institutions, accountants really do play a critical role. So the accountable institution, and this is where your obligation starts. You as an accountable institution, you need to conduct what's referred to as a business risk assessment. And then also a client risk assessment and a new product and process risk assessment. Your risk assessment needs to be dynamic. It should not be stagnant. It needs to take into account different trends and patterns that become apparent. So you'll see an extract from the mutual evaluation report. It states that the risk assessments are static and reactive rather than dynamic and may miss important trigger events, incidents, and structural changes to threats and vulnerabilities. So if you look at what's going on in South Africa today and what different types of threats the country faces and where criminals abuse certain sectors for their criminal gain, you can pick up trends, and of that trends, you definitely can factor in risk factors into your assessment of your business. So that is the whole point of being dynamic. You really need to have a full view of what's happening, not only with your organization, but also at a domestic level, even at an international level in some instances. In terms of our risk-based approach, there is also assessments that the country as a whole have to conduct, which is referred to as a national risk assessment. Then, as a supervisory body, the Financial Intelligence Center also needs to conduct what's referred to as a sectoral risk assessment. These documents are made available on the FIC website. You have actually go onto the FIC website, you will find sector risk assessments that have been published by the Financial Intelligence Center. The Financial Intelligence Center, together with other organizations, have also published the Terrorist Financing National Risk Assessment. So go onto the FIC website, download those documents. It is informative. It will help you also understand the risk your organization is facing. So the slide just breaks down the different types. So I've mentioned national risk assessment by the countries, by law enforcement, and the FIC who conducts these type of national risk assessment, sector risk assessments, and then institutional risk assessments. So for the institutional risk assessment, it's important for you as an institution to assess the risk that your organization might face of being abused for money laundering and terrorist financing. So that brings you to the question of what is risk. So there you look at the threat. If your organization faces any threat or potential cause of harm, if your organization is vulnerable to being exploited by criminals, look at different vulnerabilities in your products and services that you offer. And also if it is abused by the criminal to conduct the criminal activities, what is the consequence of that? Not only a reputational risk, but your institution can also be fined. It can face administrative fines where the FIC comes in and does an inspection and finds that your institution placed no controls to combat being abused by money laundering. So look at all of these type of factors, and that will give you an idea of the risk that you face as an organization. The higher the risk you face, the more stringent your control must be that you put into place. And this will become more apparent as we go through the slides. For example, if you're dealing with a client that is a bit more higher risk, that poses a higher risk, you would want to gather more information from that client, conduct what's referred to as enhanced due diligence. Get to actually understand the client, and in that way you can monitor the client's transactions a bit more closer and report where necessary through to the FIC. So there again, applying a risk-based approach, it means that the accountable institution can ensure that its measures to prevent money laundering and terrorist financing are in proportion to the identified risk. As a starting point, look at Section 42 of the FIC Act. It sets out what all must be covered in your risk management and compliance program. Here, I'd just like to point out there was recent amendments to Section 42 of the FIC Act. So also download the General Law Anti-Money Laundering and Combating Terrorist Financing Amendment Act. It was published in December 2022. And that General Law Amendment Act actually sets out amendments that was made to Section 42 of the FIC Act. So you'll have to read the FIC Act, Section 42, in combination with the amendments that came through from the General Law Amendment Act. So Section 42 sets the base of your risk-based approach. It requires that an accountable institution must identify, assess, monitor, mitigate, and manage the risk that the provision of goods and services by that accountable institution may involve or facilitate money laundering or terrorist financing. So you as the accountable institution, you must clearly document your inherent risk. You must set out how you are going to assess that risk, how you're going to monitor that risk, and what measures you're going to put in place to mitigate the risk and manage the risk. And we're going to go through how exactly to do that. So when you're considering risk, different factors, as an organization, as an entity, you can take different factors into account. Look at the products and services you offer. Does your products and services allow for third-party payments? Does it allow for high volumes of cash to be paid to the client? Also consider the duration of the relationship that you have with a client. The longer you've provided services to a client, in actual fact, the more you might know and understand that client. Also look at the delivery channel. Delivery channel means the manner in which you onboard the client. If you work through an intermediary, there's a bit more risk because the client can misrepresent. If you work on a face-to-face basis, meaning you meet with all your clients directly, you engage with them directly, there's a bit less room for misrepresentation, a bit less risk for a client misusing your services. Look at the geographic areas in which you offer services or in which your clients are based. So there, abroad, your clients, there might be more risk involved. You might be dealing in countries that are high risk with clients that are high risk. You might be dealing with countries that are subject to sanctions or high risk in terms of FATF, blacklists, so forth. If a country that your client is based in also has weak anti-money laundering laws, take that type of factors into consideration. It will become a bit more clear in the next few slides, I do promise you. And it's principles that you also will understand a bit better in the next few slides. Client type, we deal with various different clients. If your client is a natural person, there you know exactly who you're dealing with, as opposed to a legal person. That legal person might have beneficial owners that you would not want to deal with, be it a sanctioned individuals or beneficial owners that are part of criminal organizations or so forth. So the client type does impact risk. Whether or not your client is politically exposed, it definitely impacts risk. So whether or not there's adverse media findings on your client, that might impact the risk. There's also other factors that you can take into account, like whether there's been sanctions issued in a particular sector, or the different approaches, different or regulatory fines at least in the industry. Okay, so let me go a bit faster through the slides. So those different factors you'll take into account, and from business level, you'll look at the different business functions you provide, the business areas you have. Say, for example, one is setting up company services. There you find that a whole host of your clients are low risk, and the products or services that you provide is assisting in setting up a company with few directors and shareholders, a straightforward company, and you understand who's the shareholder and who's the directors. The clients are predominantly based in Gauteng. We understand that there is a higher level of crime, and you meet with your clients on a face-to-face basis. There's no negative media reports. Overall, that business area, you could deem it overall risk being a medium risk. You look at your trust service division. There, for example, there's a higher number of high-risk clients. You assist in setting up complex trusts, that is, trusts with maybe beneficiaries that are legal entities or so forth. Of those legal entities are based overseas. It's setting up trusts for clients that are based overseas on a non-face-to-face basis. There again, all of those factors combined, you might come to a conclusion that that particular business area faces a higher risk of being abused for money laundering or terrorist financing. So as you can see, it becomes a bit more easier when you put it into practice and practical examples. Again, on a client level, you look at the different client types, natural persons or legal entities, setting up what type of product you provide to the company, setting up a company or setting up a trust, the geographic area, be it if the client is based in a high-risk area, Iran, or whether the client is based in a lower risk area like South Africa or so forth. Again, if you meet the client face-to-face, lower risk, and then also the other factors that you can take into account, like occupation and so forth. All of those factors combined, you can come to a conclusion that it's either higher risk, medium risk, or lower risk, the business relationship with the client. So again, I'd just like to mention the questions that you do send through, be mindful this is the first step in you understanding. We're not intending for you to understand all of the requirements, and that's why it's crucial for you to attend. The more of these sessions that you attend, the more you'll gain an understanding, and it will become a bit more easier for yourself to apply. So when you're doing that client risk assessment, when you onboard a client and you want to understand a bit more of the risk that the client poses to you, there's different information sources that you can rely on. You can look at FATF guidance, you can look at trends, you can also look at guidance that's published by the FIC. So if the FATF guidance indicates there's a higher risk involved with a certain client type, for example, a trust, a complex trust that you are helping the client to set up a complex trust, trends have indicated that those trusts are used for money laundering purposes. You just think it was published quite widely, the Panama Papers, seen that there was a law firm that was misused by of its clients to set up trusts for their tax evasion and their money laundering. So they look at international trends, look at domestic trends, and factor that into your risk assessments. Okay, so this slide just gives you an idea of the different sources of information that you can take into account and apply that. Similarly, with your products, look at the different products you offer as a trust and company service provider, and rate the different products. There, again, you're setting up a trust. It could be higher risk than setting up a simple company with one director and one shareholder. So take that factors into account when assessing risk. Okay, so when you're dealing with legal entities, know that there are beneficial owners, and you need to understand who the beneficial owners are in this regard. So if you're dealing with a company and you find that the legal, a beneficial owner there is sanctioned, you have to take into account that you can't deal with or provide services to any sanctioned persons. That would be higher risk. There too, a legal entity where the beneficial owner has no negative findings, that would point to a lower risk. If the legal entity has a beneficial owner that's a foreign politically exposed person or a high-risk domestic politically exposed person, it could point to higher risks. So there, just take all that factors into account when you're assessing risk of your clients and apply that. Okay, so again, send through your constructive questions. We are monitoring the question board. We definitely do need your comments and questions, but do be mindful. So there you would follow your risk-based approach, assess the risk your entity faces from a client level, and also put into place different controls. So the higher the risk, you'd follow an enhanced due diligence process. If you have a medium risk there, and then also simplified due diligence. I see there's actually something that should be there by medium risk. It should just take customer due diligence, standard customer due diligence. So just the principle that you need to understand, the higher the risk, the more controls that you need to put in place, the more stringent controls you need to put in place. The lower the risk you can put in place, less stringent controls. So that brings us to the conclusion of risk-based approach. and the different types of factors that you can take into account when you are assessing risk. Public Compliance Communication 53 provides you with a lot of guidance in this regard. So please do download Public Compliance 53. It will help you immensely. Then we go on to customer due diligence. It's your obligation to identify and verify your clients. So you might already have practices in place where you do collect certain documents from clients and you do identify clients. You can just expand on that where necessary. As an accountable institution, you can't engage with any persons who are anonymous. So you can't have any anonymous clients. You must, in all instances, at least with an ongoing business relationship with a single transaction above 5,000, then you have to conduct identification and verification. Where it's a single transaction of less than 5,000, then you need to obtain and report some sort of information. For certain clients, if you onboard a client, you're working with a client and that client is a politically exposed client, then there's additional requirements as set out in the FICA Act. You obviously need to determine whether or not your client is a politically exposed person. I point you towards Public Compliance Communication 51, which sets out guidance in this regard. Where you do find your client is listed on either Schedule 3A or Schedule 3B or Schedule 3C to the FICA Act. And those schedules are available on the recent amendments, the General Law Amendment Act. Then please obtain senior management approval before you establish the business relationship. In addition to establishing the source of funds, you must also establish the source of wealth and conduct enhanced due diligence. So that there, the General Law Amendment Act, together with PCC 51, would provide you with good guidance in this regard. My colleague Fulu has taken you through the reporting requirements. And of these reporting requirements, Section 28 deals with cash threshold reporting. Section 28A deals with terrorist property reporting. Section 29 deals with suspicious and unusual transaction reporting. And Section 31 at least, the reporting type that you can be aware of, but note that it does not apply to you as a trust and company service provider. So there, I'm not going to go into much detail on the reporting in that Fulufelo has covered it. There you'll see Section 28, cash threshold reporting, cash transaction, which is above 49,999, you'd report it through to the center. A terrorist property report, if you become aware of a client or any person linked to a transaction being a terrorist, on a terrorist list, or on a targeted financial sanctions list, there you would report it through in terms of Section 28A to the center. Have a look at Guidance Note 6A. It provides guidance in this regard. Suspicious and unusual transaction reports. If the accountable institution becomes aware of or has knowledge of the proceeds of unlawful activity, any transactions that facilitate the transfer of proceeds of unlawful activity, or any transactions that has no apparent business or lawful purpose, or transactions that are linked to possible tax evasion, or where you have suspect that it's linked to possible terrorist financing, all of those types of suspicions, please send it through, file through a suspicious and unusual transaction report. And these are the most prevalent type of reports that are sent through. It's definitely the bulk of the reports that you as an accountable institution will send through to the center, in addition to also cash threshold reports. It is a core obligation of you as an accountable institution to send through these reports to the center. Okay, then again, we've just included this section 3.1 reference here. It does not apply to trust and company service providers. Please note, it does not apply to you as an accountable institution. It only applies to authorized dealers with a limited authority, the post bank, as well as certain financial service providers. Then also, recently, the FIC published Directive 6, which applies to item 2, accountable institutions. And in terms of Directive 6, you had to submit certain information through to the center. The deadline for submissions of the risk and compliance return in terms of Directive 6 was the 31st of May, 2023. And there is Directive 7 that's coming up, but again, that applies to other schedule items, not schedule item 2. So be aware of that and note that. Also, I'd like to mention in our last week's session, I don't know if you attended, we had a webinar on Directive 8 there. It was indicated that Directive 8 places an obligation on accountable institutions to also screen the employees. So just be aware of that application. Okay, so that then brings us to the end of the presentation. I am going to go through the questions now, and I'll just ask my colleague also Fulu to ready himself. If there's any questions that I can pose to him, I will do so. So let me go to the chat function and try to open that. Okay, so if you haven't already completed the attendance register, please do complete the same. And this presentation will be sent through to all of you for your information. Okay, so just starting from the top then. Slides, as we've mentioned, everybody that completes the attendance register will receive a copy of the slides. Do you have to register twice with the FIC where you provide both trust and company services? Yes. On GoML, there's 2 subcategories. There's a trust service provider and a company service provider. Here you would have to register. Just going through the questions to check for relevant questions. A person that assists in the daily operations of the business needs to register. Does that mean a bookkeeper would need to register as an accountable institution? The entity that provides the TCSP services must register as an accountable institution. The employees of that entity does not have to register as an accountable institution. If those employees provide trust and company services independently, then that employee would need to register separately. So, but if they conduct that services or conduct the activities by virtue of the employment, then only the entity needs to register as the accountable institution, not every employee of the entity. If the company provides trust services, but also provides other services such as auditing services to different clients, are its audit clients also subject to the provisions of the company's RMCP? When completing the fixed risk and compliance return, must the audit client's information be included in the return? So very simple, only include the clients of the accountable institution. So if it's the clients only of a certain division within your entity, be it the division that provides trustee services, then only include the information of that client. If the institution has various different business divisions and some of the business divisions do not provide that of TCSP, then they don't have to provide that information of that business divisions at least. Okay, so if you occasionally have a client who wants to open a new account and you just pass them on to a business that performs company secretarial duties and they register a company with a subsidy, do you still have to register as a regulatory body? There, Sandy, please have a look at item 2. If you don't provide any of that services under item 2, then you wouldn't have to register. It seems as if your question is indicating that you just refer clients to other organizations that provide that services. So if you have the next question, so if you occasionally have a client who wants to open a new company, okay, so that's a repeat, sorry. Again, we've mentioned the risk and compliance return was due at the 31st of May. From Richard Swanepoel, yeah, I'm an accounting officer, sole trader. I capture company and CC monthly transactions and draft financials and do the tax submissions. I have no role within any of the client's companies as I am the external accounting officer. Would I need to register as I only do small companies? And also I do a few individual taxes as well as some sole traders as well. I do not work with trusts, I do not raise funds, I do not have any other say in the company or so forth. So I think in the first part of the presentation, we definitely provided you with examples of the type of activity which would fall within TCSP. So yeah, definitely it seems as if this type of activity would fall within the ambit of a TCSP. Again, as I've mentioned, the FIC won't provide a set list of the type of activities. It is up to the organizations and the entities to look at item 2 and basically read together with the draft that was published, draft BCC 6A, in order to determine whether or not they are TCSPs. Regardless of whether the company is a small company that you're offering services to or bigger companies, it's still necessary for you to, where you provide services that fall within item 2, to register as such. Okay, if a company does bookkeeping for a trust company, hence has to register as an AI, but also does annual tax returns for individuals, are the individuals excluded from the FIC requirements? Nothing to do with trust companies. That's a very good question. Again, look at item 2. It is trust and company service providers. It does narrow the ambit a bit, in that it doesn't link it back to individuals in an individual basis. It's more linked to the creation, management, and operation of companies and assisting the. Okay, so I'm just trying to get through the questions. Do our clients need to register on the FIC? Here there's reference to weed control in terms of contract with local municipalities. Jacqueline, that question, you as an entity, if you guys provide trust and company services to your client, then you need to register as the accountable institution. And you need to obviously conduct customer due diligence on your client. Why do we include accountants? As I've mentioned, accountants do provide a very critical and crucial service to persons, and they are vulnerable to abuse. So definitely there, it was seen as a sector that needs to be covered in terms of the FIC Act. Also, if you look at recommendation 22 of the FATF recommendations, you'll see they are included in that. Trustees are not even required to have financials prepared in terms of the Trust Property Control Act. FIA, I think that comment, I think that's a comment more than, it doesn't relate to an obligation in terms of the FIC Act. There, it's definitely not an obligation in terms of the FIC Act. I'm just trying to go to the next questions. I see my colleague has responded to some. Again, registration. I just want to ask my colleague Fulu on the registration turnaround time. So if I see a question here from Leon around the turnaround time, how long does it take from the institution actually registering and getting the org ID, organization ID?
Thanks, Yolande. We do have an SLA with the team that processes any registration. So that is the 5 days. So from the moment at which the FIC received your registration, so we have an SLA to process your registration within 5 days.
Leon, there, please. If you haven't received feedback, please do check also your spam folder. Will it go through?
Yes, once your registration request has been processed, you will receive an email from the same email address that you use when you are registering. So if you don't see the notification or any feedback on your email, then yes, you can check on your junk and spam mailbox so that you can satisfy yourself that you have received any feedback from us.
There is also a call center that you can contact, and they will look into where in the process is your registration. I'll just ask the producer to publish the call center contact number. Okay. So we've covered a lot of questions on the use of unique email addresses. There, definitely you must use a unique email address for each user. Users cannot share user information in terms of Directive 2. You cannot share your credentials with any other person. Even if you are a small company, the risk still remains. You might provide services to just one client, and that client is so high risk that it really places you as an organization, as an entity at risk. So regardless of whether or not you are a small entity or one of the larger entities, there is that risk involved by virtue of the services that you do provide. Okay, so I'm trying to get low. I'm trying to go further down to the Sandy. We note your comments on the compliance obligations. Just rest assured, it does become easier when you actually understand it a bit better. Therefore, we do urge you to attend more of these sessions. You'll find that of the processes that you are already following just needs some updating. Okay. Just trying to go through the lists. Some of this compliance should be managed from a central point. Who issues a FIC compliance certificate? Who will decrease the liability on accountable institutions? This is from Fred. Currently, a potential person will undergo the same process for every accountable institution they deal with. So, as accountable institutions, you may seek assistance from third-party service providers. Look at Public Compliance Communication 12A. It is guidance to accountable institutions when they use third parties to assist them with their obligations. So some of the obligations you can outsource, but then there's other obligations that you definitely can't outsource. The obligations that you can't outsource is the obligation to have a compliance officer within your entity, and then also register with the FIC. You need to register on your own. And also reporting. When you report through to the center, you have to report through as an entity. You cannot outsource it to another third-party service provider. So PCC 12A does provide a lot of good guidance in that regard. It helps you understand what you can outsource and what you cannot. Just going through the list. What happens when a criminal becomes aware that they are being investigated as soon as they concluded a service with a respective accountant? How are we going to be protected? Please do not inform people that you are submitting a report. This is known as tipping off. Yeah, so, okay, I see that's the response that you put in there. When you file through a Section 29 report, as a reporter, as an accountable institution, you will be protected, meaning you are competent but not compellable. If there are any criminal proceedings that flow from that report, your information will not be disclosed. You are protected as a reporter. You can continue with the transaction once you become aware of something suspicious and unusual. You must report it through to the center, and then you can continue with the transaction. I think it's Section 30. I'm just looking at my colleagues and getting the actual section that you says you can continue with the transaction. It's not Section 30, it's Section, I'll get that section for you. So yes, file through a Section 29 report and know that you do gain protection from filing that report. Obviously, you cannot inform the person who is subject to the report that you have sent through a report through to the center. That would be tipping off. Section 33. Thank you very much to my colleague. As an accountant and tax practitioner, you have to belong to statutory bodies. As a member of those bodies, you have to be ethical and not take part in any bad transactions in any way. And I expected to report them. So why put another requirement layer on us, where we are, as small sole traders, supposed to find the time and money to handle this? Thanks very much for the comment, Sandy. And it's definitely something that has been raised throughout even the consultations before this amendments came to the schedule. However, the risk is there, and you have to have in place controls to mitigate that risk. So as accountants, that risk you face, you have to put in place controls to mitigate the risk. You have to report it through, not only in terms of your existing reporting, but also through to the FIC, which is confidential through on the GoML reporting platform. The FIC then can piece together intelligence reports and submit that onto law enforcement, and law enforcement can actually prosecute those criminals. So it's definitely an important role that you do play, and it's one that is definitely needed. Okay, so again, I'd urge you to look at Public Compliance Communication 53. It sets out a lot of guidance on how you can, you'll see there's even a template that you can customize, you must customize. And it's a big portion of what can assist you to become compliant and understand your obligations. Okay. I've seen quite a few comments on the compliance burden. Again, the risk that is associated, you need to mitigate that risk. So that therefore there is this added obligations, which also really protects your institution against being abused by a criminal. So I'm just looking for new comments and new streams of thought through. And I think we've covered quite a lot of them. We do note your comments on the compliance applications. I have no employees, it's only me. Only one email, so I register as an organization. So yes, I'll just ask Fulu to go through the two-step process for registering. First registering and getting an org ID and your compliance officer. Ensure that both.
Yes, thanks, Yolani. So, like I said, with regard to the registration, there are two types of registration. One is the entity registration, that is the first point. Then you register as an entity, including the information of the entity, the address, as well as the contact person detail. And then secondly is it's when that there is an already existing or actively registered entity, and you want to register or add users under that particular entity. Then you will have to register as an individual. Then you put the org ID for that particular entity that you want to register under with it. And then you also need to remember that you need to attach the required document for registration for a user, which is the copy of a certified ID, as well as the authorization letter from the entity. The letter must be on the company or entity letterhead, and then it needs to be clearly indicate that this particular user that is registering, their ID number, their username, and the role that they will be playing on that particular entity. It can be a compliance officer or an admin, normal user. So that role needs to also be specified clearly on that particular letter. So yeah, those are the two types of registration that you can register as an entity. You can register an entity and then register as an user or an existing active entity. Yeah, thank you.
Yes, so definitely registration is twofold. You must complete both steps to get your org ID and then also register a user that's assigned to do that org ID. There is a GoML user guide. It's available on the FIC website. If you go to the registration tab, you will find it there. If you have to register separately as a company and a company service provider and a trust service provider, you have to submit 2 compliance risk returns. Yes. For each org ID number, you would submit a return. The attendance register link has been posted. So you can just please just complete that attendance register link. The number for the call center has been posted, so please, if you have any further questions, either send through a query on our website or contact the call center. I think I think the questions definitely, we've covered majority of it. It seems to be the same type of questions. And I think just in closing, it definitely is because of the seen as being a gateway or gatekeeper to financial sector, or to establish companies or trusts. And it's for this very reason that you, as an accountable institution, play such a critical role, and you have to register with the FIC and submit through the various reports to the FIC. So definitely keep that in mind, and please do attend more of these sessions. You'll see as you go through the documents and the guidance products, it does definitely become easier. So that being said, I will then thank you very much for your time. It has been quite a useful session. I hope you've gained from the session, and we will set up future sessions, definitely when the final PCC 6A is published. We will set up a session similar to this on that, and you can gain also from that session. So from myself and my colleague Fulo, we thank you, and till next time, take care and goodbye.